Morning, guys. We're going to be taking a look at Tfuel today, which is the native token of Theta. We'll be looking at Theta too and how the markets run with each other. We'll be looking at the USDT dominance. There's a couple of levels that I want to talk to you about on the USDT dominance that we need to drop to get a confirmation bias of the altcoins and alt season pushing forward. Of course, Donald Trump gets inaugurated in the next 8 days. That's a week tomorrow, guys. A week tomorrow, the crypto president gets inaugurated. On the back of that, you're going to get positive crypto policies, positive sentiment, alt season. That's the aim of the game, guys. And what I'm saying is the next 7 days, don't be complacent. Don't leave crypto in the next 7 days because these are going to be an important 7 days. The market's designed to wash you out. The market's designed to make you feel fearful. All I'm saying, guys, is hold on tight. Right, okay, so we've got Tfuel trading just over 8 cents, 0.08118 at the moment. You can see yesterday would have been better to take this, but unfortunately, hindsight's a bitch, guys. We didn't take it yesterday. It is now a good time to be going into Tfuel. We're going to look in the shorter time frame because you can see we've had a break, we've had a pullback. How far is that pullback? The smaller time frames are going to tell us that. But before we do that, we're going to zoom out. And we're going to look at the heartbeat of Tfuel. So remember, guys, the bigger the base, the higher the space. So when you've got a long accumulated phase, once you're breaking out of that accumulated phase, then expect volatility. Expect a big spike to the upside with little resistance until you get to certain key Fibonacci points. So what we're going to do is we're going to add this range in. How long did this range last? And how do we know that this token is something that people are buying? We look for the heartbeat within the range. How big is this range? How long is this range? Let's do that first. From the bottom to the top, it doesn't look like much on the chart, but that is 344% to the upside. So you've got a 344% move to the upside within this range. How do you know that people are still buying it? And how long is this range? Going from the start here, that goes back 26th of April 2022 to where price is now, 13th of January 2025. Over 2 years, guys, 2.5 years. So 2.5 years in an accumulated phase. How do we know that people are interested? It's this. It's because of the heartbeat. This is showing that it's had nearly a 400%, 350% move. People are interested. It's pulled back, and then it's done it again here. It's got a heartbeat. People are buying it. People are interested. So you're creating a little bit of a reversal pattern here, guys, as well. So you're creating a little bit of a cup and handle. So once you break out of something like that, then expect another volatile spike to the moves to the upside. So that is a reversal pattern. Is it a good time to be getting into Tfuel now? Let's have a look. So we'll jump into the smaller time frame very quickly, get rid of this range. Then I'm going to stick some higher time frame Fibonacci levels on there. So the first thing that I'm going to do is Fibonacci retracement from this recent swing high to its swing low and see, is price reacting at any sticking points? And you can see, firstly, guys, look at this. This is your 382 retracement from the previous swing high. You can see price is struggling to get past here, struggling to get past this level. That level's sat at 0.08249. That's going to be my first confirmation. Once the candle breaks and closes, that's the important thing, guys. It needs to close above. Once it breaks and closes above, that's shown that the bulls have got momentum. Once the bulls have got momentum above the 382, then there's a gap here all the way up to this 0.5 level, which is 10 cents. 10 cents is going to be a psychological barrier. So if you get something like this, confirmation at the 382, confirmation, this is your gap to the next level. So that's the fib retracement from the recent swing high. What we'll do is we'll do a big fib retracement from its previous all-time high. So there's an all-time high up here, bear market low. Then we're looking for the big 382. You can see, look at these levels, guys. Clues look left. Clues look left. There's the 382. Clues look left. What's that? Support shelf. Support. When that comes back through, that it's got a high probability of acting as strong resistance. And the next thing that we're going to do is jump into the lower time frame. So we said that we're in the daily. Each one of these candlesticks represents one day. Now we can get one clue from this daily. You've got a big candle to the upside, which is created, a wick to the upside, a rejection at the 382, and then a pullback down below the 382. So we know in the daily exactly what needs to happen, but can we get more clues by looking into the shorter time frame? We definitely can. So if we go into the 4-hour, guys, you're painting a bigger picture now. When you look at the daily, you can see it's one candle, you've got a big spike to the upside, you've got a pullback. But when you look at the 4-hour, you can see one thing, a bull pennant's forming, guys. So you've got the flag, we've got the flag, there's the flagpole, got a pullback, and now you created a bull pennant. So how do you play a bull pennant, guys? You stick in a trend line on there. Once it's formed, break to the upside, you've got a high probability that you're going to get a surge to the upside. Breaking close to the downside, there's a high probability it's going to go to the downside. Overall, it's a bullish pattern because of this bullish flagpole. It's a high probability of moving to the upside. But by going into the shorter time frame, it helps us do one thing. We can put our Fibonacci levels in there. We can monitor exactly what needs to happen on the shorter time frame, and it knows whether you need to get out or whether you need to get in by looking at these certain levels, these certain key levels. So the first thing we're going to do is stick a fib from its swing low here all the way to its swing high. Is there any sticking points? Bam, 618, guys. Look at this, 618. So we're creating a range here. You've got the 382 retracement that we're getting a reaction from. We're falling below there. And then you've also got a 618 pullback. So this gives you an indication, guys, of what levels you need to hold. Do you want to pull back to the 786? If you're trading this, can you afford to pull back to the 786? What will that do to your P&L? If you're investing this and you bought all your eggs in one basket up here or up here, what does that mean? Your P&L is going to be in a loss. If you don't put all of your position in at once, what would this allow you to do? If you're investing for a long period of time or a mid to long period of time, if you don't put everything in here, it allows for, if you're pulling back, to get a lower average. If you're pulling back, to get a lower average. Bring your average down further. If you stick all your capital in at once and put all your eggs in one basket, guys, you can never do that. You can never ladder your position down. If you can't ladder your position down, you can't better your entries, unfortunately, because it's a probabilities game. We don't know whether it's going to go up. We don't know whether it's going to go down. The markets do whatever the hell they want. We just look at probabilities and we analyze what's happened previously before. Is there likely to be a reaction this time? How much of a reaction did it get last time? We can only look and analyze and try and get probabilities, guys, probabilities. So what I'm saying is risk management tools, make sure that you've got them in your toolbox, because little things like this, averaging your position down, that can give you a real edge in the market. So that's Tfuel anyway. We'll have a quick look at Theta. You can see Theta, it's the dominant one out of the two, guys. This is the main one, and you can see that it's run a lot harder. It's run a lot harder. People have got more confidence. When you look at the heartbeat of Theta, you can see that the heartbeat has actually broke through the range, showing more people are interested and more people are buying. It's all about risk, guys. People are going to go into Theta if they want less risk. If they want a real risk on, if they want to go degen, they'll go into Tfuel. Right, okay, and the next thing is going to be the USDT dominance. We're at a strong level of support on the USDT dominance, and this is a level that I want to lose. If we drop this to the downside, that's going to signal a surge in altcoins. That's going to signal that altcoins are starting to outperform the the US dollar tether as far as market cap share is concerned. And when we look at trends, you can see putting in higher highs, higher lows, higher high, higher lows. You can see the trends reversing here, guys. You put a double top in, come back down, you put in a lower high, trends reversed, lower highs, lower lows. So that's positive. We want a weak dollar within crypto, and that's what that's showing. A weak dollar within crypto. If we lose this level here, that'll show you'll get a signal, a surge in altcoins, because it's just losing the dominance of the market cap within the whole of the crypto space. If it's losing the dominance, that means others are gaining dominance, i.e. the altcoins. Right, okay, I think that's about it from me, guys. I'm going to do a video on Cardano later on, so let me know in the comments what you want me to cover next. Got crypto class actually tomorrow, guys. It's going to be an important one, so make sure you stay tuned for that, and I'll see you in the next one.